Okay, so we've decided there are make money systems and save money systems and infrastructure and compliance systems. But you know, at the end of the day, these things aren't free. No matter what the folks in open source like to tell you, that there are free operating systems and free document management systems and free word processors, you know, there really aren't that many things in life that are free. Butterflies are free. So when we are talking about these things, we might want to ask ourselves the question, where does the money come from that pays for a system, whether it makes money or saves money? Now, the reason this is important is the expectation about those systems changes based upon the source of the money. So think back to that accounting class, that riveting, I can't wait to read the next chapter of this big book accounting class. It was a really warm experience for me. And remember that very fundamental relationship that you covered early on in that class, where assets equal assets equal liability plus equity. Well, those are the sources of capital that we would use to pay for an information system. What do you mean? I use cash to pay for an information system? Sure. We have to pay for these things. The money for the salaries of an IT person, the money for the software, money for the hardware, they all have to come from those places. So think about assets. Okay, what in assets can we use to spend on IT? Well, cash. We might have cash on our balance sheet. I can use that to pay. Where does cash come from? Cash usually comes from sales. Now, there's a lot of other places, particularly in really complicated companies, that we could get cash from, but for the most part, for most of our organizations, cash is a result of sales. So I take this notion of selling, and I created cash, and now I'm going to try to spend this money on a make money system or save money system and decide whether it's a good investment or not. Now, if I invest this cash in an information system, I'm going to expect it either to cover its costs by increasing sales, make money systems, or decreasing the cost of doing business, save money systems, at least to break even and cover the cost of the cash. But that's not good enough. I could be using this cash for something else. I could just invest it in that really fun roller coaster of a stock market or even a savings account. So not only does my save money or make money system have to recover the cost of the investment, but also the opportunity cost of that capital being used for something else. So that's really important. So when we start looking at that, now I go on the other side of that accounting relationship, go to liabilities. Now what that usually means is I've borrowed money. Okay, so I've gone to the bank, we find one that's still open, and say, please lend me money for my information system project. And they're going to say, well, tell us about the project. You'll say, okay, well, there once was a system called SAP, and it's going to cost us $75 million to put it in place. And they'll say, not us. Anyway, so in addition, you get a loan. In addition to being able to pay back the loan, you have to pay back the interest on the loan. And that information helps you decide, do I invest in this information system that is so important to me that it's either going to make money or save money, and I'm going to end up being able to pay off the debt. The last place our money comes from is in equity, where this system is so important, we're going to have to float more stock, we're going to pay the IT people in shares of the company, those sorts of things. And that can get really complicated, and we don't want to talk about that. Okay, so putting this all into one big view, since information systems are about either making money or saving money for the vast majority of them, where we get the money counts. So in the event there's external regulation, in the event we have these compliance systems, we're going to try to find a way to do them as least expensively as possible. Now that all seems to, okay, we got what you're saying. What else is there? Is there something else you're not telling us? Well, you want to know if there's something I'm not telling you. Yeah, there's something I'm not telling you. when we start looking at information systems and saying, okay, am I going to make money from these things or save money from these things? That's a great conversation to have. But what we have to remember that our companies are not in business to run information systems. In other words, just as we're trying to decrease the costs associated with those compliance systems, we're trying to decrease the cost of all of our information systems. So in one sense, whether it's a make money system, a save money system, a compliance system, or an infrastructure investment, we're trying to do this as least expensively as possible. That might mean I don't need to own any of my hardware. That might mean I don't need to develop my own software. It might also mean that I don't need to employ my IT people. In other words, if IT is viewed not as this strategic element in my company, but as an important but operational thing, my tendency is going to be to try to outsource it. This leads a lot of folks to start thinking, how important really is information systems to the functioning of my company? You're going to read an article, you're going to watch a video about a guy named Nicholas Carr. And Nicholas Carr is a very controversial figure, and he said, look, does IT really matter anymore in terms of the competitive positioning of a company? And you're going to figure out kind of where you're at with all that. There's no doubt that IT is important. There's no doubt that IT can dramatically upset an industry, can change the competitive landscape, all these sorts of things. There's no doubt about that. But do you need to own it? Or is IT becoming something that you simply consume the value of? And what else about our company is like that?